Yeah, hi, this is Vipul from ComplyDP.
Hi, this is Sanket.
And today we'll be discussing about some objections the fintech companies have presented or responded to us when we had a lot of meeting with them.
Right. We'll be discussing about why those fintech company thinks that DPDP is not in their realm and why DPDP compliance is not on their priority right
Okay,
now.
so what they say most of the time when we converse with them is that all the data they are taking is in a way mandatory to be stored or taken from the purview of law. For example, they are taking data for making the payments, so that is covered by RBI regulations, and these are all legal data which they are storing with them.
So then they question whether why should we even comply because it's a legal compliance we're doing by actually collecting the data. That definitely makes sense, people, I believe.
Correct.
They are to some extent right on their point, but then again, data principle has some rights which the data fiduciary has to apply. For a moment, we'll just explain what's the data fiduciary for them.
Correct. Yeah. So data fiduciary is someone who is collecting a personal data, and the personal data is something which is pertaining to a data of an individual.
Right. And similarly, there is something as significant data fiduciary, which means any entity which collects any personal data which is sensitive in nature, which could be health data, data of minors, which could be financial information of those data principles.
Right.
So,
although specific clarification related to STF is yet to come, but the general guidelines has been provided by the Act and the rules.
So there are higher chances, when a fintech company comes under significant data fiduciary. For example, if they hold Aadhaar cards,
correct,
PAN cards,
right,
their bank accounts,
yeah, and also the email ID, the mobile number, right, also addresses,
Demat accounts,
yeah, Demat account numbers, and at times we have also realized that they also end up taking certain data like marital status,
which is not relevant towards those particular transactions.
Correct.
So that is where a policy of Digital Personal Data Protection Act contravenes with their marital status information, which is data minimization and data purpose, right?
Yeah. For example, one specific privacy policy which we came across without stating the name of the organization, they were collecting the marital data about an individual. They were also collecting the cookies, and they were also stating that they'll be taking the data from uh, the websites, or they'll be taking the list of email ID and contact. And the company was into facilitating or providing loan to the users. So natural question arose, Sanket, why are they even collecting such data?
So obviously, until now, there has been no particular policy for how to handle, how to collect, and how to process data. And this is where the landmark policy of Digital Personal Data Act of 2023 and rules of 2025 has actually kicked in. And one of the most vulnerable industries, or few of the most vulnerable industries, are fintech industry, I believe.
Correct.
The second would be healthcare, and thirdly, it would be edtech to some extent.
So yeah, and even before that, I would like to keep insurance tech.
Insurance tech is
Yeah,
that
because they also would definitely be coming under the SDF definition whenever the clarity comes from the side of the government.
Definitely. The second point, what you rightly raised, I think that why should those companies comply under the DPDP Act? Because most of the data they're keeping is legal in nature.
And also they state that they're keeping the data as per the law prescribes them to be stored with them for the certain period of time.
That's pretty valid point you guys have. You must keep it very safe. In case a breach happens or any cyber attack happens to your data, if you do not comply under the DPDP Act, you would still be liable for a fine up to 250 CR.
Right. So
Yeah.
in this case, the breach and the operationalization of mechanism to handle the breach, informing the if ever a breach occurs to the board and to the user becomes very important in this particular industry.
Definitely. Breach readiness workflow. Data subject rights must be established. Then even a data principal has the right to actually edit, modify, and even request erasure of data in case all the compliance under the legal scrutinies are fulfilled. So that data must be deleted. That is what data minimization and using the purpose for the defined work comes in. So that is
correct. And the largest of the fines are also pertaining to the breach notifications and mechanism around the breach, because there is one section called 8.5 and that is primarily for obligation of the data fiduciary to take reasonable security safeguards. And if they're not able to take one, they'll be slapped with a fine of 250.
So I'll just raise one example for it. If you are taking a data, if a fintech company takes some data, and then it happens that there has been a cyber attack which happened, and you as a company may or may not know until you have established a workflow that, okay, there has been a breach. Now our DPO, which is a data protection officer, which is relevant for significant data fiduciary, which generally a fintech comes in, has to intimate the data principals whose data has been breached, and also the data protection board established by the government of India has to be notified. Okay, there is a data breach which has happened, and that must happen within a timeline of 72 hours.
Yeah, so specifically section 8.6 says that they have to inform or intimate in a timely manner to the board and also to the data principal. And if they are not abiding by the time guidelines, then they are going to face a penalty of rupees 200 crores. So this specific industry needs to take care of these two sections very cautiously.
And also, do you think they have a valid claim of saying, oh, there is still a year and a half to actually comply with it? But don't you think to actually map out all the data, to clean your data repository, and also then to actually align everything in DPDP compliance, is it not the high time, and do they still seem okay? There's so much time.
So first of all, a lot of fintech companies deal and are dependent on a lot of vendors. So they have to take care of the kind of contracts they are having with them. Plus, they at a lot of stages have to do vaulting. We are having a discussion with one of the functionaries of the RBI. He suggested once he was given a work and the data access to that work was allocated to his laptop, which he was allowed to carry with himself. And he raised a hypothetical question, how a DPDP Act would come in picture, or how would this be implied if, let's say, that functionary loses that laptop, or let's say that laptop is stolen.
I believe a general question would come, oh, it's in a laptop, it would be okay, right?
Right.
But actually, if the laptop is lost, thousands or millions of data for that fintech is actually now exposed and vulnerable and ready to actually do some phishing by any cyber attacker, I believe. So the first act must be that it should be notified to the DPP that there has been an incidence of such loss of that particular data from that laptop. So that laptop has to be also reported that the data was there, and next, also those people who are the data principals must be made aware that your data is exposed.
So let's get into the way this needs to be resolved. So after something is lost, then probably abiding by the guidelines becomes even more difficult unless until the initial work has been taken. For example, in an organization, what it requires currently is you have to have access rights. So at every level of hierarchy, you have to provide certain rights. For example, let's say at a managerial level, you would only be having access to certain kind of fields. And also at every level, there has to be vaulting. One data should be identified with a hypothetical identifier, and it should not be available to every employee of that organization in a manner which is very easy to decipher and breach the privacy of that individual.
Definitely, you are bang on point, Fakul. If we were to tell you, that first of all, for a transaction team, only that transaction reference number data should be made available, and rest of the data must be masked or vaulted. Similarly, for compliance team, only that particular information and KYC team must only have their particular verification status enabled, and the rest of the data must be masked, so that there has pretty accurate and pretty constricted access to the person who only needs for that particular purpose, right?
Then he also explained the same functionally, that there is something like sunshine clause. So it's not only the level of access with a particular functionary or hierarchy needs to be defined, but at the same time, it needs also to be defined that for how long that data access would remain. So in a way, what a fintech company needs to do is he needs to at every level define the scope and its access and the time duration to which it will remain with that functionary or that level. So doing all these things, do you think it's going to be a month job or 2 months job? If that's the case, if the development team is so strong and you can dedicate such a resource, then probably it's easy. And you should start the work only in the month of March or April 2027. No hurries to it.
Definitely, if you were to just amend the privacy policy and tell, okay, we are now complying with digital personal data protection,
so that's
a day or two
job. But we will do it for free if need be.
Yeah, we start how DPDP compliance actually happens is first you have to map where your data is. You have to figure out where the data is actually being leaked. You have to identify who all vendors you share the data with, which are data processors. Then those data processor must be put under the clause that you have to also comply under the DPDP Act. Then, as you have said, notices, right? Notices must be there.
Different languages. And one of the concerns raised by, which we came to hear in one of the seminars, and the lady or the expert was suggesting that most of the teams currently don't even know what all data they are collecting. And the pile or the junk of data has been gathered for years and years. So they have probably older companies, 2 decades of data with them. So they at this stage don't even know. And first of all, they need to even clean that data. What they don't require needs to be deleted even before something or a big fine is slapped on them.
Like, instead of saying we still have time or when should we start the process, actually golden time has actually even started and has already some of the time been passed. You must act now or it will be too late.
Yeah, because if you look at the banks, especially the public sector banks, they have already floated the tenders 3-4 months back, even before the rules came in effect on November 2025. So tenders have been floated, and so you can look at the seriousness and the level of awareness and gravitas these organizations are placing in its implementation. And whereas the smaller companies which we are regularly in touch with, they feel there is a lot of time and it's too early to begin the work at this stage.
So if you are a fintech company, if you are a part of the compliance team, or you are the owner of that particular information, or even if you're a founder or an entrepreneur who is dealing in fintech, you must actually put this at top priority right now to get DPDP compliant. Otherwise, the future would be a little gloomy. as the exposure, is up to 250 crores, and maybe some of the
And they are per instance. It's not that
yeah, exactly.
they will club all the
Right.
issues in the guidelines or breach of those issues, and they'll club it, and maximum penalty is 250. No, for every instance of a mistake could be penalized up to 250 CR.
Yeah, and also, as you know, for example, one incident, as he has rightly said, would cost you around 50 to 100 CR. I think most of the companies in India would wrap up at that amount.
Correct, correct. Smaller companies will have even tougher times. So, and another aspect to it, why should they be starting the work now? There is another aspect to it, and that's the financial aspect. See, the number of consultants in this area, number of legal teams in this area who is specializing in DPDP compliance are limited. And do you not think that in a year that number is not going to rise dramatically or exponentially? We don't believe that it's going to, because the demand is currently very low.
He's rightly said that there are around 1.5 million companies who are actually collecting digital data in India. And I don't think so. There are more than 100,000 people also who are actually dealing in DPDP Act as of now. So the demand supply is pretty skewed as of the moment. So the earlier you do, the cost would be less in terms of the later you go, and the work pressure is so high, so they charge you around 10x of what general consultants right now would be charging.
And because this is the point of time where you can decide by comparing different vendors. So when the time comes, or when the let's say you enter 2027, all of these vendors or consultants or legal teams are going to be heavily booked.
So
you will not have a chance to bargain at that point. You will not have a chance to get 3-4 quotations before you take a decision. But this is the time you can be relaxed and decide what suits you, what financial range suits you, what kind of company you would like to work with.
If you are a B2B SaaS Fintech, it might be blowing my own trumpet. Vipul, I'm so sorry to intervene, but I've released a book recently, which is data privacy on B2B SaaS. How fintech and edtech or even healthcare companies should start their audit, then their DPDP readiness posture. It has been all given the information, so you can go down to Amazon to actually have a look and even read it to just first understand what veracity the issue is, how you are under the ambit of it, and what are the steps you need to take actually as a B2B SaaS in fintech.
So for the viewers, the name of the book is Data Privacy for B2B SaaS.
Yeah. So again, I don't want to maybe just put it as a just sharing you that the book is there, but it's more about how you are becoming compliant faster is what our goal is, and that is what we actually do at ComplyDP.com.
Yeah, and it's not fast at this moment. It's basically appropriate time one should begin, and the earlier you start, the more certain and comfortable you will be in the coming time to tackle the challenge of DPDP.
So if you want to actually delegate AI native system of records for DPDP audit and DPDP readiness posture, you can definitely submit your contact information at ComplyDP.com/contact, where we are taking a few fintech B2B SaaS companies. So every week, we follow a routine that every week we do a pilot. Yes, with one specific sector, one company. So if you are interested and you happen to be a fintech B2B SaaS, kindly come to ComplyDP, fill the form, and we will be taking care of one of the work. And you'll be better aware in how actually you have to work around DPDP compliance.
Right.
So that will be from us today. Hope to see you in the next episode. So signing off from ComplyDP.
Thank you.